Good morning, Happy New Year, and welcome back to this month's OakCrest Insight. In today's episode, I want to highlight briefly what happened in the markets and the economy in 2019 and give you what we're looking for in 2020 that could affect your assets and retirement. First of all, in contrast to the gloomy market outlooks to start the year, 2019 was the exact opposite of what happened in the markets in 2018. As you can see from your statements, almost all asset classes had a positive year. A majority of the returns came from double-digit increases in the U.S. sector in the first quarter. January was the stock market's best month in 2019 as stocks rebounded from one of the worst Decembers on record and near 20% decline in the S&P 500 in the fourth quarter of 2018. A couple key highlights in the economy in 2019 that caused market volatility were a record government shutdown of 35 days in January. China's trade war was the biggest story of the year, a yield curve inversion this past summer. September saw Saudi Arabia's oil and refining facilities attacked by drones, anti-government demonstrations in Hong Kong, and lastly, impeachment of the president on December 18th. I get asked all the time, Ryan, why does the market continue to go up with all of these uncertainties happening? Well, despite all of these, stocks continued to hit record highs in December, and U.S. stocks had their best year since 2013. Stocks overcame all of these obstacles driven by the Fed, who lowered interest rates 3 times, the economy continuing to expand, and corporate earnings due to resilient U.S. consumer spending. So looking ahead to 2020, we want to remind investors, as you can see, that there will always be volatility in the markets, and risk is unforeseen when looking forward. Geopolitics and U.S. domestic politics have largely been a sideshow as far as the U.S. stock market was concerned in 2019. The focus in 2020 for the markets is on the election later this year and the latest headline with Iran. Despite all these concerns, the markets have been at all-time highs, with the biggest risk coming off the table of a potential deal being signed with China here in January. Most investment firms polled believe that the global economy recovery will continue in 2020 due to the following. A resilience in consumer spending should continue to grow corporate earnings and fuel economic growth this year. Unemployment continues to be at lowest levels in 40 years. Inflation is well below the Fed's target level, and GDP is expected to rise right in line with normal levels for 2020 and 2021, and housing continues to edge higher. This has been the focus on the U.S. stock market. I hope this was helpful as we prepare for the next year. In next month's episode, I'm going to highlight a new law that was just passed at the end of the year that affects retirement assets and hasn't really gotten a lot of attention with all the other political headlines. We look forward to seeing you next month on OakCrest Insight.